Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about REPLIMUNE Group INC quarterly report. REPLIMUNE Group Inc. offers a range of businesses and services focused on cancer treatment through its clinical stage biotechnology company. The key areas include development and commercialization of oncolytic immunotherapies, proprietary product candidates for activating the immune system against cancer lead product candidate, RPONE for solid tumors product candidates, RP2O and RP3, which express anti-CTL aminase 4 antibody-like protein and immune-activating proteins respectively. The significant drop in REPLIMUNE Group, Inc.'s stock price over the past year can be attributed to several key events. The most notable was the FDA's Complete Response Letter, CRL, issued in July 2025, which denied accelerated approval for RPONE due to concerns with patient population heterogeneity and study design shortcomings. This regulatory setback created uncertainty about RPONE's future and delayed the company's prospects of bringing its first approved product to market. Additionally, J.P. Morgan downgraded REPLIMUNE Group's stock from neutral to underweight in September 2025, citing further headline risk and decreased likelihood of accelerated approval for RPONE. This downgrade exacerbated the stock's decline, contributing to a nearly 40% drop in the week prior and a 71% year-to-date crash. A class action lawsuit initiated against REPLIMUNE Group, Inc. in August 2025 also impacted investor sentiment, further contributing to the stock's downturn. These events collectively led to a significant drop in REPLIMUNE Group, Inc.'s stock price exceeding -31.67% over the past year. The primary drivers of revenue growth or decline are largely influenced by the company's product development pipeline, regulatory approvals, and commercialization efforts. Key factors contributing to revenue growth include the potential commercialization of RPONE in advanced melanoma, securing additional capital, payments from Roche, and successful collaboration agreements with third parties. Regulatory approval of RPONE or other product candidates is also a significant driver. On the other hand, revenue decline is primarily driven by increased costs associated with clinical trials, such as the IGNIT-MNIS-3 confirmatory study ramp-up and commercial launch preparation expenses. The completion of enrollment in certain studies and declining enrollment rates also contribute to revenue decline. Net income declined significantly, with net losses increasing from $53.1 million in 2024 to $83.1 million in 2025. This downturn is largely attributed to the company's continued research and development expenses, which have not been offset by revenue generated from product sales. Profit margins are also expected to be negatively impacted due to increased costs and regulatory compliance issues, as well as uncertainty surrounding reimbursement levels and pricing policies. These factors collectively contributed to a decline in profitability for the company. The company's financial performance indicates a concerning trend of generating negative operating cash flow, as evident from the periods ending September 30, 2025 and 2024. Specifically, the 6 months ended September 30, 2025, saw an operating loss of -$158,228, while net cash used in operating activities for 2025 was $158.2 million. This negative trend is consistent with previous years, including 2024 and 2023. The company's inability to generate positive operating cash flow raises concerns about its financial stability and ability to sustain operations. The company's debt level has undergone significant changes. While long-term debt has increased by $0.829,000, total liabilities have decreased by $9,371,000. Additionally, debt levels rose by $42.8 million through a term loan agreement with Hercules. However, interest expenses have seen a substantial increase, rising from $758 to $2,134, 181% increase. This indicates that the company's increased debt is resulting in higher interest costs. Management's outlook on the company's strategy. The company is facing significant challenges in its financial outlook, expecting operating losses for the foreseeable future. To address this, management plans to finance cash needs through various means, including equity offerings, debt financings, collaborations, strategic partnerships, and licensing arrangements. If funding cannot be obtained, research and development programs may be delayed, reduced, or eliminated. Despite these challenges, management is optimistic about the company's product candidates, particularly ARPone treatment in combination with nivolumab, which has shown consistent results across different tumor types and patient populations. The company plans to advance preclinical activities and clinical trials, increasing expenses substantially. Management aims to establish a major skin cancer franchise assuming FDA approval and develop additional product candidates. They also plan to commercialize products on their own in the U.S. and with partners in other geographies, establishing effective marketing, sales, and distribution capabilities to generate revenue. However, management is concerned about significant competition from established companies and early-stage competitors, as well as uncertainty around reimbursement levels and pricing policies for approved products. They acknowledge potential risks associated with collaborations, product liability risks, and the need for additional personnel to manage growth and commercialization plans. Overall, management strategy focuses on advancing product candidates, establishing a major skin cancer franchise, and commercializing products while addressing significant challenges and risks in the market. The company's financial summary reveals that it has chosen to retain its earnings rather than distribute them as dividends. Specifically, it has not paid dividends on common stock and does not anticipate doing so in the foreseeable future. However, the company has utilized retained earnings to buy back shares, indicating a focus on shareholder value through alternative means of capital distribution. Concerns about inventory buildup or supply chain disruption are evident throughout the financial summary. The potential for delays in obtaining raw materials and product candidates due to various factors such as trade conflicts, regulatory issues, and manufacturer performance problems is a significant concern, pages 63, 65, 87. Additionally, global supply chain disruptions caused by events like natural disasters, public health crises, or catastrophic events can also impact the company's ability to maintain a sufficient inventory, page 97. Furthermore, inflation, trade relationships, and military and political alliances can also affect the cost of manufacturing and regulatory review/approval of products, pages 96-97. These concerns highlight the potential risks associated with inventory buildup and supply chain disruption. That concludes the financial summary for REPLIMUNE Group INC. Feel free to comment below, and I will be happy to answer them when possible.